private sector fund of funds. Now, I really was fascinated by the insights into how government funds of funds can accelerate ecosystem development. That's what we've just heard here. And really, I'd like to thank Pradeep, because he's shown us policy innovation that creates sustainable funding pathways. Exactly what yesterday's discussions, identified as critical for scaling startups. The progression from seed to unicorn that you described addresses yesterday's emphasis on patient capital and follow-on support. And this is how you build investment-worthy startups. If you want to know what I mean, check out Amazon, Google it with my name, and you'll find the book, Investment-Worthy Startup by Tony Davis. It's available on Amazon. Now, let's explore how all of this translates into financing mechanisms, that can scale impact alongside returns. I'm going to do some introductions about the panel that's going to tackle sustainable finance for the Global South, where impact meets returns, and guess what? Both win. I'm going to start with Harris. Harris, are you here? There you go. Please come on up. Now, Harry Shafee is the Managing Director of EQ Advisors. Can you manage? Yeah. Perfect, thank you. Harry has been pioneering exactly the mechanisms that emphasizing blended finance that creates both financial returns and social impact. Thomas, Mr. Miller. Is Thomas Miller here? I didn't think so because I haven't seen him. Yeah. Benjamin? Thank you. Now, Benjamin Metho is the head of SMEs for one of our sponsors, the Cooperative Bank. And Benjamin represents the practical capital access that turns sustainable finance theory into startup reality. Saurabh? Mr. Chatterjee?
He's outside.
I saw him. He's here. Tell him he's on, please. While we're waiting for him, you've heard he runs CEO Care Ratings, and they're doing an amazing job. We've seen the adverts, and he is going to actually be moderating. We found him! Ladies and gentlemen, Saurabh Chatterjee.
Thank you. Thank you.
Over to you.
Hi, good morning. So, thanks. I think there was a meeting which I had to attend, so sorry for being just at the last minute. So, welcome Harish, welcome Benjamin. I think the sustainable finance is possibly the most discussed topic in Africa, given that there are so many requirements in terms of pressure, that there are so much of emission. But technically, if you see, where I come from, Mauritius, there are a lot of discussions about this emissions and all. But if we actually look in, Africa doesn't even contribution to the CO2 emission will be significantly lower than most of the other continents in the world. Right? But then there are discussions about the preaching from the Western world that we have to be in line with the requirements and all. So under that context, because we talk about a lot of things on the context of the green commitments from various DFIs or from the Western world. We see there are a lot of targets which are given. What's your view on that?
He's trying to get everybody to the room. I think. I think he's getting everybody inside. Yeah.
Okay. So before we start, I'm going to do a presentation.
Hi. We'll talk about sustainable finance.
Oh, yeah.
Typically when we talk of sustainable finance, we assume that it is something to be done by governments, something to be done by multilateral institutions. So I thought it's important we talk about sustainable finance from the perspective of private sector as to what private sector should do and why they should do it. I don't want to spend too much time on this, but sustainable finance is all about addressing the global problems, whether it is infrastructure, climate change, global south, poverty eradication, biodiversity, all the SDGs. So I think it's very important that these subjects are handled, and there is a good reason why private sector should get involved in this. So why private sector should get involved? I think we've reached a stage where private sector is now very, very big. Some of the big companies are much larger than several governments. If you take from the valuations, they control directly and indirectly a lot of wealth. They employ large amounts of people, and their ability to influence policy is very, very significant. There are enough numbers here which talk about the fact that 50 companies control 30% of the global GDP, and this number is only increasing. Now, therefore, the ability for governments to do is slowly coming down, and it's the private sector which needs to do it. And now, why should they do it? Is it their business to help alleviate poverty? Is it their business to address climate change? So my argument here is that if they want to survive, if they want to prosper, where are the markets? The markets are across the world, the markets are among the people, and if the people are in distress, whether because of climate change, loss of habitation, poverty, they don't have markets. And therefore, it's in their long-term interest that they take a longer view and therefore invest in these areas, in their businesses and in their funds. Now, there is a lot of chatter about ESG, and my firm is focused on ESG, and therefore the page here. So ESG is all about incorporating aspects of environment and society. Of course, governance is something that all funds want, into your investment practices. And there is data, of course, data is something that you can manage to show that ESG funds do perform better, and more money is getting into ESG. We may have a temporary pause right now, thanks to what's happening in the US about climate change and ESG, but I think the rest of the world is quite aligned to ESG, and therefore I think it is important that everybody looks at it. Now, regulation is supporting it. India, we have something called the BRSR, the Business Responsibility Statement. So you need to disclose more about your actions relating to climate change, relating to gender diversity, relating to all these aspects. And ultimately, the final force for any business comes from the consumer. And consumers are demanding, particularly the younger ones are demanding that companies are more responsible in the products they produce, the services they do. So I think clearly we are seeing an increase in sustainable finance. It's pretty small in the global scale now, but it's slowly increasing. We have about 4 trillion is the financing gap for the emerging
markets, but sustainable bonds, for example, topped $1 trillion for the last 2 years, and a lot of this has come from the Western world itself, both governments and private sector, particularly from Europe. And the emerging world needs to adapt to these standards and try and exploit this to raise more and more money. So there is support from multilateral institutions for this, and this is the forecast is that we will have a 20% growth. The challenge for us is how does Global South integrate into these markets and take their required share from them. So when we talk of sustainable finance, we have blended finance, which is a combination of finance from philanthropy of the government along with private sector, which sort of balances the return for the private sector. Transition finance to help companies move from a stage where they are probably impacting carbon very heavily to something where they reduce their carbon emission, micro investing, and impact investing. We've heard of them. Here are some products that people typically use. I'll explain a couple of them. Green bonds, where you raise money saying, the project that I'm using money for is something which will create a positive impact as far as climate is concerned. Green bonds have become very popular. The typical issuers are renewable companies. There are a lot of financing companies which say that we raise green bonds and we online, but it is not limited to these companies. Anybody who has a project which has a positive impact on climate can raise a green bond. There are some basic standards, and you need to get an opinion, and you need to obviously meet the conditions of that. There is something called a greenium. A greenium is a discount that you get compared to a standard bond by issuing a green bond. This greenium one could estimate based on market forces, and the bankers will tell you. The government of India did I think $3 or $4 trillion, $2 billion of green bonds, and they estimated they got about 7 to 8 basis points of greenium. So there is an advantage to you for doing a green bond, but it's also a signal to the rest of the world, your customers, your investors, everybody, that you are doing something good in terms of green bond, greening the world. There are social bonds. Social bonds are when you're doing something which uplifts people from poverty. There is a company in India called Sriram Finance, which is done in total over a period of 3-4 tranches, $1 billion plus of social bonds. And this is because they are funding people to buy their first truck or the second truck and helping them become entrepreneurs. So the CEO told me that if they had raised a standard bond, they wouldn't have been able to raise this amount of capital. And these are the kind of new products that people are aware of, and there are pretty standards which are available for issuing all these bonds. I won't get into all these details. The presentation is here, and if you reach out to me or to the organizers, they would be happy to share the presentation. So we'll move on. So then I talked about the frameworks which are there. You need to get rating, and I've listed all the others, and maybe sort of can take it through. And CARE can also get into this business. Coming from the Global South, they may do a better job of all this. Yep. So here is a pitch. My company eCube has partnered with the Stock Exchange of Mauritius to set up a dedicated platform for all these products to be listed and traded out of Mauritius. And here is my pitch that consider issuing any of these products and issue them to Mauritius. The alternatives are London and Luxembourg, where you will have to pay a fat sum of money for as fees. And Mauritius is equally good in terms of meeting global standards. So that's a pitch from me for the new platform we are setting up. Happy to share more details with anybody who is more interested. So here are some of the other companies from Africa which have done green bonds. You will see typically they are banks and people in the renewable energy space. Next slide, please. And again, some examples from different parts of the world of companies which have done this. And let me stop here. So I think the way forward is two things. One is obviously for you, if you are a company doing any projects which fit into any of these areas, to look at raising money, and as an investment to look at more sustainability. In India, for example, the Reserve Bank has created a new product called Green Savings Account, which mandates that banks which raise such money from savings account will invest only in climate positive projects. So new products are coming in, consider investing in them while doing your normal investment. Back to you, sir.
Thank you, Harish. Thanks for the very comprehensive presentation on the green bonds and what EQB is doing a fantastic job on that. Before we start, okay, let me introduce the panel again. My name is Saurav Chatterjee. I'm the Director and CEO of Care Ratings Africa, which is part of Care Ratings India, the second largest rating agency of India. We do a lot of work in the green finance, in green bonds, both in India and Mauritius. I'll come to that. Before I would like to introduce Mr. Harish, who is the MD of EQ Advisors Limited. We just heard his views on sustainable finance. We also have with us Mr. Thomas Abila.
Yes.
Okay. You are with the Amosani Energy Partners LLC.
Yes.
Welcome, Thomas. You can speak about yourself.
Yes. My name is Bobby Abila, and I'm a banker professor. I worked with Citibank in New York for 15 years, and now I'm the founder of
Okay, welcome. And we also have with us Mr. Benjamin Metho, who is the head of SME Property Bank. Can you please introduce yourself?
Good morning. My name is Benjamin Metho. I work for Cooperative Bank. I have SME, where I'm in charge of supporting policies, developing the policies, and also making sure that all our SMEs in Kenya are well supported on the capital. Thank you.
Thank you, Benjamin. Before I go on to the questions and all, just to set the context, I was even stating before we started this discussion just earlier also. There is a lot of discussion about green bonds, about Western world preaching us about we should be reducing our emission. Getting to that, as I was saying, Africa possibly accounts for only 2 to 3% of the total CO2 emission which happens in the world. This is the contribution of Africa as a continent to the world emission. But still we are being told, because Africa is one of the mineral-rich continent currently, so still we are being told that you have to take care of our emissions. So while it is well taken, while the funds are well accepted, but it should not come at a cost where the cost of financing hits the people for setting up of both, whether we are talking about on the E side, on the energy side, whether we are talking about on the sustainability side or on the governance side. Harish, coming back to, I'll start with you. You spoke about a lot of companies in Africa who has raised the green bond, a lot of this multilateral institution. I think another thing I would like to add here that Sim Finance and Envolt, which are two companies out of Mauritius, which has raised the green bond, and these bonds, one of the bonds is listed in the stock exchange of Mauritius, and both the bonds are rated by us also. One, to support climate change because they are putting up renewable energy. Another is to finance hybrid cars. But across Africa, where do you see how this would be utilized? Is it E, S, or G? Which one do you think is the most important when we talk about Africa?
To address this as well as the previous point you made, I think while Africa is probably the least in terms of emissions at 3%, we think and we believe that Africa will grow very fast over the next few years. Now, it is important that we grow in a sustainable way rather than repeat the examples that the Western world has done. Now, the Western world has obviously generated a lot of carbon and spoiled the environment significantly. We can blame them, we can ask them to make reparations, we might succeed partly. But where is the impact of all this coming? It will come to India, Africa, and countries like us. We will face maximum heat, we will lose a lot of land, and therefore we can't just say, you made the problem, you solve it, we will do exactly what you did. We don't have that choice. So that is point one. The second is that there is a financing mechanism that is available today. Let's exploit that and use it to the maximum to reduce our cost of finance. Today, all the standards I showed you are coming from the Western world. We need to adapt them, use them. So the challenge for us is, as we grow, how do we become more sustainable and leverage sustainable methods to grow. We can't stop growing. Our energy consumption, whether in India or Africa, is going to go up. We will produce more carbon. But if we go linearly, we will produce too much carbon. Can we reduce it and therefore benefit us?
Thank you.
Maybe it's an addition to what I said. What I see most in Africa would be in G. That's a big level research almost, because a big what you need most is the capacity building in terms of governance. In terms of environment, and the EMS, I think we are well blessed in Africa. But the challenge comes with the governance, where we need a lot of capital capacity building in that area.
Sorry, I missed that second question on ESG. I think governance is something which is not negotiable, and both E and S are important for Africa.
I think I agree with both of you, but I have a little divergent view. I think for Africa right now, more than E and G is the S, the social aspect, which is the most important, where really we can make an impact. Because we cannot treat somebody who is currently using the wood in Africa to provide food to the children, and cannot teach them that no, you cannot use the wood because it is impacting nature. So I think that's where Benjamin, you are possibly playing a very good role. How are you supporting the local SMEs in Kenya or in the Eastern Africa, if I have to ask you?
Okay. Maybe before I come to your question, allow me just a minute to speak about the organization that I work for. I have, as I said during the introduction, I work for an organization called Cooperative Bank of Kenya. We are one of the sponsors for this event. As a bank, we are the third largest bank in Kenya in terms of asset base, with Kenya sharing about 0.7 trillion that we are in terms of, and converted to about $5.5 million in terms of asset base, and therefore making us one of the largest bank in Kenya. In terms of our networks, we have about 205 branches all spread all over the Kenya, and we are divided into three major business units, that is corporate, retail, and cooperatives. So therefore you can see where you would fall in, whether it's a retail SME, where it's a corporate, or whether it's cooperatives. Maybe now to go to your question in terms of what are we doing to support the SMEs in Kenya? The biggest challenge for all SMEs in the global south is the capital constraint. I think that is the basic problem for all SMEs in Kenya. And not only in Kenya, in terms of the global south. And therefore, then what we're doing as a bank is to make the capital accessibility easier for them. And how we do that is within our networks. Then we are able to support these SMEs, making our processes easier, ensure that we have cheaper capital for them, and also ensuring it is available when it is needed, because it might be available, but again, it will not come when it is needed. So I think for us, we have made to ensure that the process is a bit easier, to ensure that when that capital is needed, you are able to access it in time. Over and above that, we do a lot of capacity building to these SMEs to ensure that at least they have a lot of awareness in terms of what it is that they're supposed to do in terms of ensuring bridge their capital gap.
Just before I move to Thiru, I just like to ask you, have your bank gone for any kind of capital raising on the green side? Have they raised anything? Have you found that there's an interest in the Kenyan market, or it's the international DFIs that we are talking about? And do you think that the cost is cheaper? Because what you are doing is impact funding when you are supporting the SMEs in developing.
Currently, we have not gone to the green bonds, but that's a vote as a bank I know will be good because it's a cheaper capital available there. Currently, we have been utilizing the capitals within available and also being supported by the international partners. But I believe that that's a route that as a bank we need to explore in terms of changing the green bonds into the capital.
Thank you. Coming to you, Samba, I think you have a great international experience. What is your view when we are talking about looking for funding from the Western world, or we should look inside Africa for those kind of fundings, and how we can reduce the cost of borrowing?
I think some of the challenges around raising capital into the market is that most of the players who are local don't have access to that information. So meaning that, we might say yes, in Africa, we may contribute to 2%. The question is when you get to what I call the social aspect. The mom and pop who's using firewood in the village, if you will, has no clue about what these global bonds are. Let's just start from there. Then second of all, when you look at the market as a whole, yes, people are understanding what these bonds are. The question is, are they willing to invest in that, or maybe invest in the S&P 500? So again, it's really, is it the egg before the chicken? But really, that's really what it is.
I think absolutely right. This is where the problem is, because when we are looking for Africa, we are always targeting green funds for supporting climate or energy. But how are we going to support the social aspect of it? I recollect I heard somebody saying, I think before yesterday, I was attending a session in the video and somebody, mentioned that they have traveled to some part in Kenya where somebody is feeding 2,000 children a day, and his aspiration is go up to 1 million children a day. Now, these are the facts. How can we bridge that, and how can we get the money? Should we not look into Africa for this kind of funding to reduce the cost, or we should be looking outside?
Well, I think you need to be able to look inside first, right? Because really, that is really where the capital is. When we look at a global scale, you have to find those particular funds who have an interest in Africa, and just really get the funds from there.
So, I think that's something. Harish, can you enlighten us that whether is there a possibility, like how the global south works? You and I understand works a lot in the Indian context. So if you can just share a little bit of your experience in India, that how India addresses these issues, and how possibly we can try to take a leaf out of that and see that how we can address these issues in Africa, primarily reduce our cost of the funding, and if you can also touch about the greenwashing, which I think is one of your favorite topics.
Yeah, so I think we talked a lot about using firewood for people cooking, and that they can't issue green bonds. So, for example, in India there are a couple of funds which have started. They've developed what they call smokeless ways of cooking for women, and they give that free to the women. And they raise a fund on the back of saying, by doing this, we are impacting, let's say, 25 million households. Those households will generate income and reduce carbon. We will sell the carbon credits and make money for our investors. So somebody has to think of solutions like this to create that. At the same time, the government is backing with, reduced price cooking gas. So we need to think of how we aggregate all this and then convert it into a sort of carbon credit or a green bond, and that is how these things would
I think these sort of impact bonds are most required in Africa than we talk about.
Correct.
And
Exactly.
thanks for giving this, coming up or explaining this. On the greenwashing.
Sorry, greenwashing is obviously a challenge, and particularly in markets like us. Obviously, there is somebody who's giving you money for doing a green project or a social project. It's there even for donors. If you misuse that money by claiming to do green or social and use it for inappropriate purposes, that is what is greenwashing. And obviously, the challenge is that if people adapt to this, the region, the country, or those kind of projects will start receiving funding. For example, there was a mechanism earlier where if you say, I'm using a particular technology, but I need some additional money to reduce the carbon, there was a funding which was available from EU, and a lot of Indian companies were availing of this finance. But at some stage, the EU guys discovered that most people are forgetting that they're not doing anything extra, but they are claiming that they spent extra for the technology, and entire funding for India for these kind of projects stopped. So I think it's important that we are, and Saurabh touched on our governance, which is being true and honest. That is very critical. If you cheat, you're not only impacting, you may make some money in the short term for yourself, but you're going to impact the larger society by getting branded as thieves in that sector. So please avoid that.
No, thank you, Harish. I think you have explained it well. Just before going on to Benjamin on this greenwashing, I would just like to touch upon. I think today one of the biggest challenges which is faced, that when you are looking for a Western money, is basically they want to understand if there is greenwashing which is going to happen or not, even the funds. And I think that's where we as a rating agency or even the independent evaluators play a very critical role. And we as CareEdge Africa, we have a membership with the International Capital Market International Capital Market Association, ICMA, whereby we follow their green bond, sustainability linked bonds, and even blue bonds principles when we assess this kind of projects. And when I say that we assess, we are very much interested to assess projects which are supporting the SMEs or supporting development of SMEs in different geographies of Africa. And I think when I interact at the ICMA level, we see that there are a lot of guidelines and a lot of regulations which are being set, which actually can protect the investment. So obviously one is the investment, one is getting the investment at the right cost. And as you said, Harish, I think another fact is protecting that or channelizing the investment, that the investment is happening at the right cost, for the right cost for which it has been done, and that's where we as CareEdge play a role. Benjamin, coming back to you on this, what kind of challenges in Kenya you are facing when you want to when you want to support the SME sector, and how are you trying to overcome these kind of challenges? Do you think that there are a requirement at the social level, funding is required, or do you think that you are sitting on surface front, or there are no projects for that? And what are the challenges you are facing on deploying these funds?
Thank you for the good question. I think for SMEs in Kenya, just like any other SME in the global south, the challenges for these SMEs, most of them in terms of the capital constraints, over and above so many other challenges that they do face. You still have the same challenges of an SME facing the capital constraint in India will be the similar problem for the SME in Kenya. And therefore, what we are doing is that we try to start to walk a journey in that SME, right from the startup and the projection for their growth. When it comes to the capital access in Kenya, and just this kind to solve their capital constraints, we have a narrowing of the products that we give to these SMEs, basically depending on the level of the operations that you're in. because basically you cannot equate the same and startups, a corporate or an SME level. And therefore, depending on where we meet them at the level of the operation, then we're able to gauge in terms of what is the need, what the size of their need that, and how then do we plug in as an institution to support that business. In terms of how do we then try to overcome some of these challenges that we do see them, one, we do a lot of advisory. We do a lot of advisory to these SMEs. We have a department full level just to support in terms of advisory that can reach from how do we then do that business in Kenya, how do we ensure that we have a smooth entrance, how do we do the taxation, how our policies run, and also as a country then we also have a full-fledged ministry for MSME that also, where we're not able to support them, we're supposed to send you there and you get a better also advisory in terms of how then to plug in as an SME, either in terms of advisory, either in terms of licensing, either in terms of whatever it is for the need to start our business.
Thank you. Thomas, you want to add to that?
Yes, I was going to add to this. Raising capital for SMEs in Kenya is very challenging. And so you have some funds that can give money for on lending to SMEs. Now the issue is the money was borrowed in dollars. The SME is spending in shillings. The interest rate, or what I call the exchange at the time, was maybe 100 shillings to $1. At one point it went up to 160. So all of a sudden the fund that you have worth $2 million is now worth $4. The question is the SME is not able to earn enough shillings to be able to beat what I call the credit service. And so that is an example I've seen, which we actually worked on, and it was just really challenging.
Thank you, Thomas. That was very pertinent problem that you have raised and which currently is being faced. And that's where the point is, are we craving for Western money, or we should be looking internally to finance this kind of SMEs? But before coming to that, in fact, I'd just like to understand your Amboseli Energy Partners LLC. What exactly the work you are doing, or what are you doing?
We're simply a company that deals in commodities. That's really what we do.
So you mean you are financing, you are doing trade?
Yes, we do trade. So you buy products and sell. We have a client, let's say in South Sudan, looking for maize, rice, and all that type of stuff. And so we source it and we ship it to them.
You ship.
That's what we do.
I think that is one of the biggest challenges which Africa faces. That a big part of Africa possibly produces a good amount of food, but the food doesn't reach the last mile, or doesn't get transported in a proper manner. So now, in terms of trade finance, actually we also work a lot with a lot of these trade financing companies who are more on commodities, on oil, and definitely on the food security. So when we are talking about these challenges, if you can give or if you can explain some of the solutions which can be there, that how Africa can try to resolve some of the food challenging issues, and rather than importing from the Western world, can we not look into, like you said, maize is possibly there in Sudan, oil is there in Nigeria, the commodities are there, Zimbabwe is producing minerals, South Africa is producing. How can these be reached, or how can these be transported in a more effective manner within the continent?
I think around trading specifically with commodities, if there's an existing platform that has all these products on there, so you have a platform for buyers and sellers, and also having what I call the local banks bridge the financing, then you're able to match both buyer and seller. Because really what it is, even here in Kenya, if you look at the belt from between Busia and into Uganda, there's a lot of trade there. The question is,
Currency.
Yes, you can find anything that you want. The bottom line is finding something, or being able to afford the product, have the logistics ability to where the goods need to go to, and afford the rate and so. So that's really, at least some of the challenges I see in Kenya specifically.
can't Africa, I think yesterday there was some kind of discussion we were having that Africa is like, somebody said 1.4 million people, 54 states, when they say 54, 55 states, and this is the size of the GDP. But why not? Can't Africa, all the countries, can't it trade in one particular currency? Or can't the trade be happen between the two local currencies? What is your view? You have worked in the international market. Do you have any view on that?
I think African Development Bank is putting a payment platform for Africa. And so for that, at least you can do trade. The question is really now, when you put in the commerce of the world, the science of the world, it's really more, yes, they have the product, but by the time you get it from there to here, it's easy to ship it from Brazil and half the price into the local market. And the question really is, yes, what are the common paying platform is number one, of those two at competitive rates, and having the product being able to be delivered at an affordable price, then everybody wins.
Thank you. I don't know about the time, but I think Harish, you have anything to add on this?
No, nothing more. I think we discussed the foreign currency issue. Obviously, if you are doing a green bond or a social bond or a green plus bond, it will, and if you are looking to attract Western investors, it needs to be in a foreign currency. So first, are you ready to assume a foreign currency risk? The advantage the Mauritius platform offers is that you can list and trade in 5 currencies. So you can consider that. But first and foremost, is your business able to sustain over the period of the bond the ability to pay in whatever currency you contract to? That is something you need to be clear about.
I think if we take out that risk of the depreciation of the currency and we start trading in local currency, whether we talk about minerals, food, and everything, I think a lot of the issues can get easily sorted out. At least a good part of the risk can get sorted out. I think that's where possibly yesterday Africa possibly needs to think about, maybe, I don't know whether it's a one currency we are talking about or one regulation, an African trading agency, a Pan-African trading agency, a different kind of rating scale, rating models. Even for sustainability or green bonds, we need this kind of innovation and thinking. I'd just like to open the floor for questions. If anybody have any question.
We can only take one question, please. So make it pertinent. Thank you. Yes, ma'am.
I think you have to allow to because she also raised her hand.
Hello. Thank you. Hi, my name is co-founder of Parallel South, which is domiciled in Mauritius, and that's why I just had one question. Regarding that EV financing by SIN, the project, the green bond that you're talking about, come to think of it, actually EV leaves a bigger carbon footprint than a combustion engine. And also, I know that the emission factor calculated, I think by Deloitte, was even higher than the regular vehicle. So sometimes what we call as green bonds is actually greenwashing. That's all I just wanted to say. Thank you.
Yeah, to answer to that question, I'll tell you, it's not Deloitte, first of all, who has done that calculation on the CO2 emission.
Whoever has done it.
It is done again by the Western world. It is those green bond principles, or we talk about ESMA and their guidelines. If you go there and if you even go to ICMA's website, which is follows ESMA, they only say that if you are particularly using a green vehicle, EV or hybrid vehicle, and if you are shifting from a petrol or a diesel vehicle to an EV vehicle, you are saving this amount of fuel, and that's why you are saving this amount of CO2. Again, that's where the problem is. We are always being guided by the Western world. We are not coming up something of our own. I absolutely agree with you, because that probably is not the right bond. But then if that follows the principles which are set by ESMA or ICMA or others, then, and that's where the investors are comfortable that they can invest in such kind of bonds. That's one thing. I understand even if the EV cars are used, yes, that helps in reducing of CO2. And just for people, I think in Mauritius, out of 60% of the emission is from the cars actually. And that's where the EV cars can help. But yes, after effect, we don't know after 7 or 8 years how are they going to deal with those batteries actually.
Thank you very much.
Can I have one?
On that note, can I have a round of applause for the panel, please? Thank you, gentlemen.
Where's the photographer? MIA. Can somebody please do the honors? Thank you.
Thank you.
Thank you. Another round of applause for them, please.